This week on Market Journal. If you're thinking about replacement heifers, we've got some considerations you should keep in mind. Plus, we discuss new and proposed laws for cattle production. Our grain marketing analyst also breaks down the recent spikes in fertilizer costs. And if you frequent UNL's CropWatch, now's your chance to have your opinion heard. This week's episode of Market Journal starts right now.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.
Promotional support is provided by the Nebraska Farmer Magazine.
Welcome back for this week's edition of Market Journal. I'm Bryce Doeschot. We have plenty of topics to discuss today, so let's jump right in and see what's making the headlines for agriculture news this week. Starting things off locally today, if you're a frequent viewer of the University of Nebraska's CropWatch, you now have an opportunity to help shape the content delivered by the website. With CropWatch being a main source for the University of Nebraska Extension's research news, it's paramount for the website to connect with its viewers as much as possible. That's why CropWatch editor Katie Moore tells us there is currently a survey available for CropWatch viewers to give their input on what they'd like to see from that particular resource in the coming year.
Well, CropWatch is a central resource for extension information. All the research that they do, we basically publicize that for our readers. So that's crop production and pest management information. So it's a pretty important role that CropWatch plays for the readers. The aim of the survey is to find out from our readers how they use our content and what kind of use that provides for them. So we're really wanting to find out what they've found the most valuable over the past year in the content that we've provided. So when the survey is closed, I'm planning to share those results with our extension educators and specialists. We'll use that aggregate survey data to determine how successfully CropWatch is meeting the expectations of our audience. So we can attempt to tailor next year's content to give readers more of what they're looking for and what they need.
With agriculture being an ever-evolving industry, it is of the utmost importance that the available material and the delivery of that material is up to date and as relevant as possible for our viewers in order to help them make the best decisions possible for their collective operations.
Well, because there's always something changing in agriculture. For instance, soybean gall midge hasn't even reached our western producers yet, and we just spotted tar spot in the the far eastern counties this year. So there are pests and diseases that they're dealing with that they've never had to deal with before, and it's our job to make sure that we are staying on top of those changes and providing them the latest information and the best information that they can possibly get to protect their crops and combat these problems so that they can, improve their operations too.
If you'd like to take the time to fill out that survey, Katie tells us it's very succinct and should only take about 5 minutes to complete. If you visit the CropWatch homepage, you'll find a link for the survey in the top right corner of that page. Katie also tells us the survey is 100% confidential and will be available through the end of December. She also encourages anyone who utilizes CropWatch to participate in this survey, as it will give administrators a great snapshot of the effectiveness of the content provided by the website. Moving on, and we're turning our focus to the markets. We were fortunate enough to be joined in studio this week by author and analyst Elaine Kub to discuss some of the recent movement in the grain markets. We began our conversation by going over recent spikes in fertilizer prices. We're joined now with Elaine Kub, author and analyst. Elaine, I want to start today's conversation talking about fertilizer. The American Farm Bureau put out a report. They've got producers saying prices are up 300% for them this year when it comes to fertilizer. How do you see that the price of fertilizer impacting this coming growing season?
Well, there's absolutely no doubt that it's higher than last year, and when you go to look at your overall cost of production, it will be higher than it was last year. From that effect and the effect of higher fuel prices and higher machinery prices, higher labor prices, higher everything prices, you're going to need another 50 cents per bushel, let's say, to get profitability out of your corn crop. So it's not a disaster. Now, part of this thing, you mentioned the 300% over last year. First of all, prices for a lot of things were depressed in the 2020 scenario. So it's not too surprising to see some things recover, but it's also sort of exacerbated in a local scenario when you say 300%. From a nationwide perspective, anhydrous prices or urea prices are actually more like 143% higher than a year ago, and actually only about 13% higher than the 2012 high. So it's not as panic-inducing as it sounds just on a local thing. If you just looked a few months ago and now all of a sudden you're getting a new bid, and it's really alarming. But overall, it's going to be doable for folks to pay these prices, even as high as they are. We're talking like $1,300 a ton for anhydrous, which is as high as it's ever been.
We hear this time of year people start to talk about planting intentions, and will the price of fertilizer impact what people are planning on for next year? What's your take on that conversation?
I think in the United States, my impression is that farmers have a rotation and they typically stick to it, and I believe that we will have enough fertilizer available in the United States for people to get planted whatever they want to get planted. Globally, though, it's a different scenario. I think we really will see skimping on fertilizer applications, particularly for wheat in Russia and Europe, because that's where the fertilizer story, the nitrogen story, and the natural gas behind the nitrogen story is really, really hot, and that's what's driving these international fertilizer prices. So that's why I think globally, yeah, it's going to have an effect on yields just because of people skimping on fertilizer. But here in the United States, I don't really know if anybody's going to be switching away from corn based on this factor alone.
You mentioned the global aspect of the markets. Let's talk about South America. Of course, this time of year, we're all closely watching the weather situation. Is that the biggest driver of the markets right now? We've seen some big fluctuations in the markets because of that.
Yeah, I think so. I think day to day, you wake up and you see soybeans up double digits or down double digits. I think it is almost directly related to whatever the forecast for South America happens to be. And that's, of course, legitimate this time of year because, we don't have a lot going on in North America, but also they have been dry. So anytime they do get, a burst of precipitation, that is helpful. And the global supply and demand scenario really depends on what's going to come out of Brazil and Argentina here in early 2022. So it's very legitimate for this to be a weather market based on South American weather. And I think that's absolutely what we're seeing here, probably through the end of December, trading on those South American forecasts, and also to some extent, whatever the funds are doing to reestablish themselves or rebalance their holdings through the end of the year.
Imagine the pace of exports had to play a factor in those markets, the direction they're going each day as well, though. What do you make of the pace we've seen over the past few weeks?
Yeah, we've seen a pretty steady pace of daily export sales announcements, but that's not too unusual for this time of year, and we are the cheapest market, obviously, until South America comes to the market, as I mentioned, in early 2022. So it's not too surprising. We need to see more of that. We need to see that continue.
Elaine, we began this conversation talking about profitability as it relates to fertilizer. I want to kind of jump back to that and talk about for corn, soybeans, and wheat. What are you seeing as we approach the new year for that profitability level?
Yeah, as I mentioned, things are more expensive than they were last year, but honestly, when you compare that to the market prices, so let's say it costs you $9.5 to grow a bushel of soybeans in 2022. The new crop market for 2022 is offering you at least $11 cash price. So there is profit in it, and there's certainly profit when we see wild wheat prices. Now, wheat prices are very wild from day to day, so it may behoove someone who's planning on, or who has winter wheat planted, to get some of that locked in before things get wilder. But the profitability is there. Hope is not lost for 2022, despite how expensive inputs have become.
Finally, Elaine, the Fed announced, this is some late news for our broadcast today, but the Fed announced that they're going to be raising interest rates in 2022 3 times. How did you see that affect the markets right away, and what do you expect long-term for that announcement?
Well, it seems like the investors of the markets generally see that as a positive sign that the Fed is going to responsibly try to handle inflation, right? And this goes back to our discussion about input costs. When things just keep on getting higher and higher priced nominally, that's that's hard for businesses to deal with. So to have the Federal Reserve come out with a clear statement that they want to deal with inflation is overall positive for businesses like farmers. And we haven't seen the markets freak out about these interest rates yet. So far, so good.
Final word is yours this week. What risk management advice or marketing advice would you like to leave our viewers with today?
Well, ordinarily folks don't necessarily get started on new crop sales this early, but it's not a bad idea when you mention the profitability that is there and the possibility that you could have continued, negative movement throughout the end of December.
Elaine, always appreciate seeing you in person this time. Thanks for making the time for this program.
Well, it's a pleasure to be here.
A big thank you to Elaine for taking the time to join us in person this week. Next week, we will be joined by livestock economist Daryl Peel from Oklahoma State University. As always, if you have a question that you'd like for me to ask him, email us or get in touch on social media, and I'll be sure to pass along your question. Turning to the livestock markets now, some livestock producers have looked to policymakers to address some of their concerns with the markets. And to that point, the U.S. House of Representatives recently voted to establish a library of cattle contracts. We visited with UNO livestock marketing economist Elliott Dennis about the cattle contract bill earlier in the week. But we began the conversation with Elliott discussing a recently House-passed extension of the livestock mandatory price reporting. And Elliott, the House of Representatives passed a bill that extends the livestock mandatory price reporting. Let's start out today's conversation reminding our viewers what LMR is.
Yeah, so it's federal requirement that packers, when they purchase cattle or purchase hogs, they have to report that information on. And when they sell boxes of meat on, that actually goes into agricultural marketing service database. And that's available for all producers and people to use. You just Google USDA MPR, pulls up that data. And really that's when we talk about sources of information of where we get price. Pre-1999, all of that was voluntary price reporting. Then we had the issues in the hog market that really spurred on this, leading to that 1999 authorization of LMR, which was implemented by USDA AMS in 2001. So really important. And when we talk about just information, that's where we primarily get our price information from.
Well, you mentioned that information is available to producers. If somebody's not taking advantage of that right now, what are some ways they can do so?
So, yes, first out, it is pretty clunky to go on USDA's website. And so always reaching out to people like myself or people in your local area, they can help you. But also the Department of Ag Econ and myself are developing some online tools for producers that will automatically download the data and allow the producers to plot that information. And those should be launching sometime in the beginning of next year. So I understand that sometimes it is difficult, and we're trying to make it more accessible for producers as well.
Elliott, also passed in the House was a bill that's targeting a cattle contract library. Tell us what that's all about.
Yeah, so this is similar to what's already in the hog market right now. Basically, every formula contract that's negotiated has to be reported how they derived at that base price. This is, I think, a nice step for the livestock market or the cattle market in particular to develop something like this. And I think we can learn from what's available in the hog market and then get that information. It is pretty dense. If anyone has ever seen the hog contract library, there's pretty much about 150 pages for the Western Corn Belt, 3 contracts per page. So I think passing that contract library is a good step to provide some of that transparency, but really USDA providing the resources for people like myself or other people in the industry to then translate that information that's reported into business making decision is really going to be important, and which is really going to help producers out the most.
One of the things I want to remind our viewers is that both those bills will now head over to the Senate and will need the president's signature before coming into law. Let's talk about the cattle market in general now, though, Elliott. Has anything caught your eye in particular as we're continuing to go through the month of December?
Yeah, the biggest thing that I've been looking at has been cull cow pricing. When we look at the cutter cow cutout, look at typical seasonal patterns, that gives us a nice indication of kind of where the market's at. What we've seen is really prices stay elevated, and they've pretty much stayed elevated since about August, when we typically see seasonal declines in that. The last time this happened was in 2014, 2015, and those prices pretty much stayed elevated until approximately September of the following year. I think there's a really strong indication that those prices will continue to stay elevated, at least in the cutout level, into next year. And I think there's actually even more pressure to see those potentially go up. So I'm really following that because we talk about profitability for producers. 10 to 20% of income is derived from marketing cold cows. So not inconsequential decision of when and how to market those animals.
Well, Elliott, we're about ready to put 2021 in the rearview mirror here. As you look back at the past year, what have been some of the biggest stories that strike you?
Change is kind of the word that comes to mind. I think we've experienced a lot of change, a lot of adaptation. You could pretty much go into any different segment and say, wow, there was a lot of change or variation in price that happened. And I think that's kind of the thing that I'm looking forward into 2022. We start to see a lot of strong signals with a herd contraction going through, and really we're talking about the spring for fed cattle really shaping up to be very, very strong prices because of a number of factors, and also going into the fall of 2021 and the winter of 2022 being strong for feeder cattle prices too. So I think we've experienced a lot of change in 2021, but it's really put a nice kind of market fundamentals there for really, I think, strong prices going into 2022.
Elliott, as always, thank you very much for your time.
Yeah, thanks for having me.
Thanks again to both Elaine and Elliott for taking the time and sharing their expertise this week. We look forward to having them back on the program in the very near future. Up next, a lot of focus on technological advancements in agriculture is often geared toward crops, but high-tech solutions and new startup businesses are exploding on the scene in livestock production as well. Whether it is in cattle software management, traceability platforms, or technology that improves sustainability of livestock operations, technology is on the move all across the livestock sector. You can read more about some of these new startup companies in the industry in the December issue of the Nebraska Farmer. It is now time for weather with Nebraska Extension Ag climatologist and Market Journal Chief Meteorologist Al Dutcher. Well, Al, most of the state got a decent dusting of snow over the past week. How are things shaping up in the coming days?
Well, Bryce, you're correct. We have seen snowfall pretty much across the state, even though some of the areas received just barely enough to make the little white on the top of the grass surfaces. That snow, of course, last week eventually caused all of the destructive severe weather in Tennessee, Kentucky, Illinois, and parts of Indiana, Ohio. And subsequently, the storm that came out this week brought similar conditions to our region, but not nearly as big of tornadic activity in terms of the size of the tornadoes. We did see in Nebraska at least 8 confirmed tornadoes, 2 hail reports, and at least 112 wind events. For the entire region in this one day here in the central United States, there was over 500 wind reports. At least from a standpoint of the data that we have of currently available, at least 5 stations that we know from airport locations across the state exceeded 80-mile-per-hour gusts, with the peak so far being 93 miles an hour at the Lincoln Airport. The good news is a much quieter pattern is going to evolve over this next 7 days. We're going to deal with a little bit chillier weather than we've been dealing with for the past 2 weeks as we get more of a normal type winter pattern. And then we have to pay attention as we get past the Christmas Day holiday weekend for the potential for storms coming from the western United States into the Central Plains. So as we go to the upper air miles, the first thing I'll draw your attention to is a trough responsible for our active weather here late this week has now moved off to the east. We have a little bit of cool air that will be sagging in this with this trough this afternoon. That's going to keep us fairly chilly off the day. Most of the temperature will be in the upper teens to the low 30s. Most of the snowfall stays well to our east and to our north. Now as we go into tomorrow, we start to see a rebound in temperatures back into the lower 40s, upper 30s. Most of the gen energy stays to the north of us, so we're going to be fairly high and dry here in the center part of the country as the main activity wanes to the west of us and to the east of us. By Monday, a little bit more warmth as we make it up potentially into the low 50s across the south and the mid 40s across the north. Once again, even though there's surface low showing here in eastern Colorado, no moisture for us to deal with as it remains pretty much locked over the western United States. We do have a trough moving across the Great Lakes that will push slightly cooler air into our region and a massive upper air storm trying to move into the western United States. Surface low darts are developing southeastern Wyoming. Once again, the fetch of moisture ahead of that low, there's just nothing there, so there's really going to be no precipitation. By Wednesday, a piece of this energy looks like it wants to eject out through the southern Rockies, and at the same time we have surface lows to our south over eastern portions of Missouri and in the Ohio River Valley, so they're going to interrupt any of that moisture flow up toward the north. As that first piece of energy moves in, it's going to basically develop a ridge behind the backside of it and bring a little bit of cooler air from our north, dig it down into the Ohio River Valley. That should keep our temperatures pretty consistently within the normal range. We should be in the upper 30s to the mid 40s across the state. On Friday, we'll get a little boost in temperatures. This will be Christmas Eve. We may see temperatures making it up into the mid to upper 40s across the south, lower 40s across the north. That big storm to the west starts to eject that energy in as we get into the post-Christmas time period, so this is the one to watch for. Look at the 8 to 14-day forecast. It takes us from essentially next Thursday through the following Tuesday, above normal temperatures to our south, well below to our north, so we're kind of caught in that transition zone. And in terms of precipitation, well above normal moisture the entire period to our west.
Thanks, Al. Finally today, last week we discussed developing heifers to fit into their specific production environment. This week we're joined by UNO cow-calf specialist Kacie McCarthy to discuss some of the things to keep in mind if you're considering replacement heifers. Market Journal's Mike Straub has this story.
If investing in your heifers is the goal, development cost, breeding cost, and time selection are going to be some of the main considerations.
So when we think about developing heifers, a lot goes into it. And so we think about the finances and development costs, breeding costs. And so there are a lot of things that we need to consider. And so if we're considering investing in our heifers and developing heifers on our own, there's a few different times that we can consider looking at heifers and selecting heifers. And so that really first time is going to be at weaning. When we are evaluating our production records, we start to look at our genetics from this calf crop and thinking about those replacement rates. And so our heifers over winter can be a low economical investment for those heifers, depending on how we develop them and thinking about inputs.
Making sure you have a production plan and goal is important to think about when deciding how you want to develop your heifers.
The other time frame that we're really going to be considering when we think about those financial inputs is going to be at breeding time. And so having a really good production plan and goal for our heifers, moving from weaning and how we're developing them up until breeding season, will really be important to think about and or considering purchasing heifers. So we've got a couple different options if we want to develop them over the winter or potentially buy some bred heifers moving into the next breeding season.
Age is an important consideration when managing heifers. One thing to remember is to reference your records when it's time to make these kinds of decisions.
So when we think about management decisions or considerations for our heifers, age is one of the first ones we think about. When we think about age of heifers, this is a great time to pull out those calving records and take a look at those heifers that are born early in our calving season and or that mid cycle of our calving season. Generally, when we look at the research that's been done, looking at longevity of our females in the cow herd, we see that those females that are born in the first 21 days or even that second cycle of the calving season, we see that they retained in the herd for an additional year. When we start looking at that further with the research we've seen in the state and surrounding states, we see that those heifers that are born earlier and then also conceive within those first 21 days of their breeding season stay in the herd longer. They produce and also produce a calf, one more calf over their lifetime compared to selecting heifers later in the breeding season.
Understanding your production goal is a major consideration when thinking about genetics and phenotypes.
So when we think about selection related to genetics and phenotype, the first thing you really need to think about are what are your production goals. At the end of the day, what do you want your heifers or your cow herd to be producing? So when we think about some phenotype, ultimately we're looking at structural soundness, we're looking maybe at udder quality, we're looking at docility, composition, and may have some other phenotypes in terms of broodiness that we're going to be selecting for when we're looking at those females. But also taking the time to evaluate our EPDs of our bulls and our cows is also something we should be considering when we're looking at our heifers. Understanding that bulls play a huge role, and scrotal circumference can also help identify those heifers that may be pubertal early. And so with increased scrotal circumference, we see that increase in puberty in our heifers. And so that can be used as a selection tool.
When thinking about heifer replacement, having set goals, referencing records, looking at EPDs, and understanding your environment play a huge role in how heifers are developed.
So when we're thinking about heifer replacement considerations, have an idea of what you're looking for and what your goals are for production records, looking at EPDs, and know your environment. I think that's going to play a big role on how these heifers are developed, and especially thinking about the resources we have available this year. So what are some of those byproducts that we might be able to use for supplement to target those rates of gain, and or what are our feed resources in terms of dormant range, or are those heifers in a feedlot, and making sure that we look at those rates of gain, and if you need help looking at development rations or supplement strategies, reach out to your extension personnel. We're happy to create some rations for you to keep those heifers on track.
Investing in heifers takes a lot of consideration. Selection time, genetics, and development cost are just some of the things to think about when deciding upon replacement heifers. Reporting for Market Journal, I'm Mike Straub.
Thanks, Mike. If you'd like more information on this subject, we've included a link to the recent Beef Watch article by Kacie on this subject to the Market Journal website. Well, that's going to do it for this week's episode of Market Journal. Remember, if you missed a story, be sure to download the Market Journal mobile app, or you can follow us on social media to join in the conversation. Next week, we'll take a look at a new wheat variety app that will make selecting wheat varieties easier for producers. Plus, we'll catch up with the University of Nebraska-Lincoln Vice President and Vice Chancellor of Agriculture and Natural Resources, Mike Bain. He'll join us to recap the year of IA&R and preview what's coming up in the new year. As always, we hope to see you back right here next week. Until then, I'm Bryce Doeschot. Thanks for watching.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.